Hello and welcome back to Uncontested Investing. This week in our episode series about foundational episodes for investors looking to make that jump from smaller to medium investors to that next level of being a larger scale investor, we're going to talk about choosing the right market for expansion. And today I'm joined by my co-host, Suzanne Andreessen. So Suzanne, I'm excited to get into this topic, right? Another layer deeper of how investors can succeed, expand, broaden their horizons, and take that next step in their career. It's a very exciting spot to be in for investors, right? Thinking they're going to make that jump and all the necessary steps to do so.
Sure. There's a lot to talk about. You know, when you want to talk about choosing the right market, who's your audience? Are you looking at, in Maine, is it a short-term rental? Are you near a college town? How are you jumping into this space? Deciding there's significant housing shortage. We hear that over and over again. And how can you positively affect that? And what are you trying to achieve? So I think those are things that will play a significant role as we have this conversation.
Yeah. And I think that's a good place to start. One of the things that I think is extremely important for investors to understand is the competition level of that area that you're looking to expand, that potential market, and the pace, right? How quickly do you need to move? Is this something, like you said, if it's a market that's maybe a couple states over, but it's a very quick moving, people are jumping in on these properties and scooping them up within a week or two, and you just don't have the bandwidth because you're so far removed from that situation, maybe that's not the right market for you. Maybe you have to have a partner in that market, right? So there's a lot of things to understand, but when you're talking about competition and pace, you really need to be dialed in, because it's one thing to say, oh, I just, throw a dart at the map and say, I'm going to expand in this market. But if you're not ready, you're not prepared, you don't have the right tools at your disposal to make that expansion, then it's a fruitless activity.
Or you can get yourself in trouble. So let's take a quick stab at short-term rental. Airbnb is significant around the country, or already of those type environments. And you go out, you buy, two assets in a community, and all of a sudden, a month later, they pass a zoning ordinance that short-term rental is now prohibited. Well, now what are you going to do? Your plan completely changed. So a lot of that is doing your homework, and even from a competitive perspective, can you rent it at a rate that's attractive, but still provide a positive cash flow for you when you're competing with other short-term rentals in that same market? And how do you go and pursue those? But certainly, and there is a significant change in ordinance happening all over the country with these short-term rentals.
Yeah. And I think there's a laundry list, and I'm wondering what your perspective is on this and who you think might be best suited to handle this. But as an investor, you're always going to want to have those conversations before you make any commitments, right? There's going to be loan officers, there's going to be realtors, lenders, maybe even general contractors or property managers in the area. So is there an important place to start within those? Do you think all of those conversations need to happen? How would you handle that?
Well, it's going to depend upon the market also. Let's talk about student housing. There's a shortage for that, but a lot of that, your student housing year really ends in May when the semester is over, not necessarily when the rental contract is over.
Yes.
And so how do you bridge the gap to September when the next, resident comes in for that, who's now a freshman or sophomore in college? And so what do you do, and how do you allow subletting? How do you create that model that's going to work for you? And those are key things that you need to understand. And I think there's great opportunity, and there's great money to be made if you go through that and find the markets that work for you. But you find the sweet spot wherever you are. If you're near, a hospital, and you've got doctors coming in, or traveling nursing staff, there's a lot of things out there. There's a company called Pad Split that allows you to do varied renting a room versus a house in a structure. So there's all kinds of things to use as your model, but find the one that the market that you're pursuing can support.
RCN Capital offers flexible loan programs designed to help wholesale partners close their clients' deals faster. From fix and flip properties to long-term rentals, new construction, and multifamily investments, we provide your clients with the funding solutions they need. With competitive terms and a quick approval process, we make it easy to focus on growing your business while we handle the financing. Learn more or apply today. Click the link in our bio or email info@rcncapital.com. Let RCN Capital help take your wholesale deals to the next level. Yeah, and there's a lot of research to do up front. We spoke about it in the last episode with the rise of AI, but really one of the things that Zillow, Redfin, and those sites have going for them is they have those metrics, right? What sold recently for how much. Really rely on those, especially if it's going to be an out of town market expansion where, like you said, you're going to a university town. Might be your first time, and those values might be skewed because, as you mentioned, they're not getting rented out all year, right? It's August to May. So there's that lapse in those couple months where you don't have a tenant. So you may have to upcharge more than you're accustomed to, right? To fill in those gaps. If you can charge a little bit more, okay, then it's fine to miss June and July and most of August without a tenant. But you've got to do that research up front, be able to find areas and pockets where a lot of houses are going on the market, because that's another thing, right? If you go to a market where there's a lot of established players or investors that are scooping up everything that you think is perfect to add to your portfolio, if that inventory is gone before you can make a move on it, well, then again, you're just running the risk of putting in a lot of energy and not getting any of the benefit or the reward on the back end.
But why do you think the investor is able to scoop of that property? They have established a relationship with their local realtor in that market. And they've got a team, feet on the ground, a teammate to help them through that. So as you start to look at these expansion strategies, these are things that you should be developing as well. Find the partners in the space, whether it's the local realtor, a local plumber, a property management person. If you don't want to manage it yourself, find the team that can make it successful. And that's a key piece to that.
Yes. So you got to be on, your iPhone is your best friend. If there's people out there that use an Android, I apologize. I'm in the iPhone world, but
Me too.
start doing that research, right?
Yeah.
Who's got the 5-star reviews?
Yep.
What realtor in the area is, on social media making a name for themselves? Reach out, say, hey, I'm going to fly out in a couple weeks and start doing some preliminary research. I'm thinking about expanding into this market. Buy them a cup of coffee, take them out to lunch. They're going to remember that. They're going to remember your name, your business card, whatever the case may be. And that's the beginning of a very great relationship, because that's how you win. You're right. Next time a market or a property comes available on the market, that realtor's saying, hey, I've got something perfect for you. I know we just talked a couple weeks ago. How fast are you willing to move on it? Because this property is going to become available. That's how you get ahead. That's how you win when you're talking about expanding in different markets.
And I'm going to do a shameless plug for the REI Referral Network.
Let's do it.
We actually developed that strategy. It was a way to connect real estate agents with investors across the country. And a lot of times, if the investor is in California, doesn't mean they're buying in California. They could be buying in Massachusetts. So you need to figure out how you can communicate with people all over the country. And we did that really. There was no place for an investor collectively to connect with real estate agents and choose agents in different markets. So we did that truthfully to help develop the acquisition and disposition strategy. On your fix and flip, if you've got a realtor that you've partnered with that helps you buy these fix assets, they want to be the partner on the flip also. So there's your strategy. So if you help me find these at these good rates, you'll be the one to list it for me and sell it down the road. So those are the things that you want to start looking into and figure out who are the people in the local market that you're looking and pursuing. And that's how I would go about it.
Yeah, and it dates back to our general contractor conversation that we had last week as well. Investors, I want them to avoid this at all costs. I'm not saying that everybody has this mindset, but a lot of people get into this and they think they have to do it alone, right? If I start letting people in on what I want to do, what I want to accomplish, that just means more competition floods the space and I can lose out on these opportunities. What you really need to be focusing on is building out a team that can help you win, right? The realtors, the general contractors, the property managers, all these people benefit from a successful investor. So if an investor is always reaching out to them, bugging them, asking questions, buying them lunch or coffee, as we mentioned, right? They're going to remember that and say, all that nagging is starting to pay off for an investor. I'm going to give you this lead. I'm going to let you know about this property, this deal. And then it just becomes such an efficient process where as an investor, you have 2, 3, 4 different people that you're relying on to send you deals, but they are also relying on you for that flow of work where you're actually helping their bottom line. So it's a very give and take industry. You just kind of have to find the right people, the right situations, I guess.
Find an edge.
Yeah.
And you can still compete with a national REIT as a small investor. If that REIT's buying and holding and your plan is to fix and flip, well, the realtor gets 2 from you
Mm-hmm.
versus one from the REIT.
Yes.
And so that's a huge piece that, you can develop like a commitment that, we will have this partnership for as long as it goes. Then, and if they get 2 VIGs from you versus one from somebody else, financially, that
Yeah.
works out better.
No, yeah, I was going to say, for any conversation that you're having with an industry professional, lead with the fact that you're an investor, because the light bulb goes off, right? There's that BRRRR strategy at RCN Capital. We talk about that all the time with brokers, right? Don't just be a broker that connects an investor with a lender. Be an asset that allows, be an asset that allows an investor to say, I can't think of doing this investment process without the broker, right? They take so much work off my plate. They allow me to do this, move a little bit more freely, find different properties, do the boots on the ground investor work, right? The broker handles the numbers, the deals, the phone calls, the email tag back and forth. There's a time and a place to just rely on that broker and allow them to do the work that they want to do. So you as an investor can expand your portfolio and do the work that you want.
And you're more nimble across all gamuts.
Yeah.
From acquisition to tenanting or relisting on the MLS, you've become a more nimble.
Yeah. And I would say one of the important things I would hedge all investors or advise all investors to do is maybe stay away from the popular markets at first, right? There's always these buzz cities that get thrown out.
Too much
the
competition.
Nashvilles, the Austin, Texas, the Los Angeles, the Miami, right? Parts of New York City, you name it. There's those popular cities that everybody knows about. Yes, you'd be dying to have an investment property in those cities, but the competition is ruthless. There's people that have been doing this for decades that can run circles around you. So go to the markets where there's less competition. That's where you gain your experience, you gain your income, your profit. Once you do that a bunch of times in different little pockets of the country, now you've accumulated wealth to go after that investment property, beat everybody to the punch, and you can do it confidently, right? The last thing you want to do is expand in a market, get into a bidding war for a property, and reach above your pay grade or outside of your buy box, right? You don't want to get into those bidding wars and just get the sake of the property, because that's where emotion comes in. You talked about that last week as well. That emotion can get the best of you and make you make irrational decisions where you're like, yes, I got the property.
But it's
and
going to
then
cost you way
2 or 3 weeks, you're like,
right.
Oh, I got the property. So you got to avoid those at all costs. And, there's a right time to go after the big markets, but there's also that pacing of doing it in steps.
REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today. Well, and figure out, what the investors, the major REITs don't like. And that could become your niche.
Yeah.
Niche. So you've got maybe a lot of them don't want to buy anything older than, I'll say, 1985. And there's a lot of maybe rehab houses and I think those actually have more character. The really pretty banisters and things that were in the old school kind of housing.
Yeah.
That the REITs don't want that. They want something newer, or that it has a pool. Find out what another market perhaps in the same location as a community, but is in a different strategy. Go for the older houses, have more character, probably a bigger backyard, more mature trees, and that creates, to some cases, a more attractive living situation. So now, and that's feeding into the resident experience as well. So you can find the niche that works for you, and if your first strategy isn't being successful, develop a new one in the same market.
Yep. Yeah. And there's so much data out there, market reports.
Sure.
That information is easily accessible for investors. I can't believe we've gone this long without mentioning LinkedIn, but that is a gold mine, not only for networking, but for market updates, news, where the major players are, what they're doing. So, swimming against the current can be a very successful strategy, right?
Sure.
If you're just trying to avoid the major players, the people that already have their stake in the ground in a certain area, you dare to be different, right? Go off on a different path, find those houses with character. As long as it's within your buy box and there's a strategy that makes sense, you can make money just about anywhere within the United States.
Just go about it the right way. Do your homework. You find your AI partners, find the Redfin and Zillow and all those others that are out there, or Dwellsley, or any other thing from a buy, hold, and rent that you can use to help you analyze. But once you come up with a plan, you need to try and stick with it, and don't morph it too quickly if it's not working.
Yeah. The last thing I want to touch on for this conversation, would be the competition that we've talked about. It can be intimidating, right? Expanding into a market where there's a lot of other people that are successful investing in real estate. There's an intimidation factor there where the investor thinks that they can't talk or approach those investors. Just give it a shot. The worst that they can say is, I'm busy, I don't have the time. They were once in your shoes and people gave back to them. People gave them advice, sat down and talked to them. So just because there's people in that area that are successful, don't think that they're unapproachable. Say, hey, how did you do this? Maybe I want to do it in a different market. Maybe eventually I want to get successful in the same market that you're successful in, but doing it with different properties. So never be afraid to ask people. That's one of the things that's been a real eye-opening experience for me in this industry. You get into it and you think it's very cutthroat, very competitive, right? There's so many people that are out there that are willing to help. You just have to be proactive and ask them.
And don't be afraid to ask for help. That's a piece. And we talked, last week about mentoring, and there's an upside for them mentoring you also. You go out there and you build a portfolio of 25 assets in their neighborhood in what they're trying to achieve. Well, who's the first one you're going to ask when you go to sell it? You're going to go back to them and help them build up their portfolio as you plan your exit. So there's a couple ways you could do that. Don't be afraid to ask for help, because and they'll give it to you, knowing that down. And if you said, look, I'm only in this for 7 years, they're like, terrific.
Mm-hmm.
I'll help you out when that comes too.
So there's choosing the right market for expansion 101. Professor Suzanne and Nate, class is dismissed. Thank you so much to our listeners for joining us today on another great episode of Uncontested Investing. We'll see you all in the next one.
See you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.